Hello, and welcome back to the channel. I'm Algabot, your guide to the world of automated trading strategies for MetaTrader 5. Today we are taking a careful, educational look at an expert advisor called Gap Anchor Continuation. This one is a little different because it is a pure price action approach. There are no moving averages, no oscillators, and no traditional indicators of any kind. Instead, it studies the shape of price gaps and how the market behaves around them. By the end of this video, you will understand how the strategy reads a gap, how it waits patiently for confirmation, and how it defines its risk. Everything here is for educational purposes only. Let's get started. So what does this expert advisor actually do? Gap Anchor Continuation is built around a classic price action concept that traders often call gap and go. A gap happens when one bar opens at a meaningfully different price from where the previous bar closed, leaving an empty space, or void, on the chart. The strategy treats a strong gap as a sign of one-sided commitment, where price tends to keep moving in the gap direction rather than snapping straight back. What drives the decisions here is not an indicator, but geometry. The strategy looks at just two bars, the prior bar and the bar that just closed. It measures the size of the gap between them and compares it against a simple volatility yardstick, which is the average bar range over a look-back window, computed directly from price. If the gap is large enough relative to that average range, and the gap bar closes further in the gap direction without dipping back to fill the empty space, the setup is considered worth watching. But the strategy does not chase that first candle. Instead, it arms the setup and waits. It is looking for the first pullback that retests back into the gap void and is then defended, meaning price dips into the void but closes back in the original direction without filling the gap. That defended retest is the tell that the void is now acting as support or resistance. This style suits a patient, rules-based educational trader who prefers waiting for confirmation over reacting to every move. It trades a single symbol on a single time frame, holds only one position at a time, and arms only one setup at a time. As always, trading involves risk, and losses are a normal part of any approach. So think of this as a study of mechanics rather than a recommendation. Let's walk through the logic step by step. The expert advisor acts only once per completed bar, so it is not reacting to every tick. First, it builds its volatility yardstick by averaging the high-to-low range of recent bars over the look-back window. This average range becomes the ruler used to judge whether a gap is meaningful. Next, it examines the two most recent bars. It calculates the gap as the just-closed bars open minus the prior bar's close. For a gap up, that gap must be at least the gap multiple times the average range. The just-closed bar must finish higher than it opened, and its low must stay above the prior close so the void is not already filled. A gap down is the mirror image. When these conditions line up, the strategy arms the setup and records the two edges of the void, the gap origin, which is the prior close, and the far edge, which is the gap bar's open. Once armed, it watches for the defended retest. For a long, price must dip far enough into the void, measured by the retest depth fraction, while the closing price still holds above the gap origin, and the bar closes higher than it opened. When all three are true, the strategy signals a continuation entry in the gap direction. Risk is defined cleanly. For a long, the stop loss is placed below the gap origin by the stop buffer times the average range, because a full fill of the gap invalidates the idea. The take profit is then set at the reward-to-risk multiple of that measured risk. A short uses the same structure in reverse. Finally, there is hygiene. Only one position and one armed setup exist at a time. A fresh qualifying gap rearms onto the newer one. The arm expires after the set number of bars, and it is canceled immediately if a close fills the gap origin. The geometry is also sanity checked, so the stop and target always sit on the correct side of the entry. Let's read the code the way you would in MetaTrader. At the top are the input parameters you can adjust. Lots sets the volume per trade. GapMultiple is the heart of the filter. It sets how large a gap must be relative to the average bar range, so a higher value demands bigger, rarer gaps, while a lower value lets smaller gaps qualify. Range lookback controls how many bars feed the average range yardstick. RetestDepth decides how deeply price must pull back into the void before a retest counts. Stop buffer sets how far beyond the gap origin the stop sits. RewardRisk sets the take profit as a multiple of risk, and expiry bars limits how long an armed setup stays valid. Now the signal logic. The code reads 4 values from the just closed bar and the prior close. It computes a threshold by multiplying GapMultiple by the average range, then measures the gap. For a gap up, the gap must clear the threshold, the bar must close above its open, and its low must stay above the prior close. Those 3 checks together confirm a genuine, unfilled gap. For the long entry, the code calculates the retest level inside the void. It then checks 3 conditions: that price dipped to that level, that the close still held above the gap origin, and that the candle closed bullish. When all 3 are true, the stop loss is placed below the gap origin using the stop buffer. The take profit is computed from the reward to risk multiple, and the order is placed. It is clean, transparent, and fully rules-based. Let's bring this to life on the chart. On the left, watch the first 2 candles. Price closes near 10850, then the next bar opens well above it and closes higher, leaving an empty void behind. The red line marks the gap origin, our invalidation level, and the blue line marks the far edge of the void. The strategy arms a long setup, but does not chase the move. It waits. On the third candle, price pulls back and dips down into the void, yet the candle closes back above the gap origin and finishes bullish. That is the defended retest, so the buy entry signals here. The stop is placed just below the gap origin, because a full fill of the void would invalidate the idea, and the take profit sits at twice the measured risk. Over the next few candles, price continues upward and reaches the take profit level near 10912. Now the mirror image plays out on the right. Price closes near 10905. Then the next bar gaps sharply lower and closes weak, leaving a fresh void above it. The red and blue lines shift to mark this new gap. The strategy arms a short setup and waits again. A couple of candles later, price rallies back up into the void, but the candle closes below the gap origin and finishes bearish. That defended retest signals the sell entry. The stop rests just above the gap origin, and the target is again twice the risk. Price then rolls over and falls to the take profit near 10840. Notice how both trades only acted after the void was retested and defended, never on the gap bar itself. This is for educational illustration only. And that wraps up our educational look at the Gap Anchor Continuation Expert Advisor. We covered the core idea of trading with a gap rather than fading it, how the strategy measures a gap against an average range yardstick, why it arms, and then patiently waits for a defended retest before entering, and how it defines its stop loss at the gap origin and its take profit as a reward to risk multiple. We also read through the key MQL5 parameters and signal logic, and watched both a long and a short example unfold on the chart. Remember, everything in this video is educational information only and is not financial advice, a recommendation, or a solicitation to trade. If you found this helpful, please like the video, leave a comment with your questions, and subscribe for more MetaTrader 5 strategy breakdowns. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.